And welcome back, everyone, to the Bitcoin Business Bureau. I'm your host, as always, LitecoinLeader. Today, we're going to talk about relative perspective, 1% versus 99%, not necessarily a financial battle. Of course, this is not financial advice. This is just one guy talking on the internet, sharing his thoughts. But we're going to talk about Bitcoin and crypto and the relative space, relative size of the space that where we are at, and also adoption as we get into it. And we're going to start with a little bit from Michael Saylor and a little bit about some imagery just to give you some relative perspective. But then I'm going to bring it home and talk about where we're at as far as adoption, where we're at in percent of people that are involved versus the amount of finances that are involved. And those numbers don't match. So more in a moment.
Just a quick reminder that nothing in this video is considered financial advice. I am not your financial advisor. This is not financial advice. Seek out your own advice and do your own diligence, do your own research.
So the video I wanted to share with you today, 3, 2, 1. So I wanted to share with you about a 2 to 3 minute clip here of Michael Saylor. And we talk about him a lot, but he's probably one of the most quoted and most prolific speakers right now in the world of Bitcoin and business. And what he says here is really important. I'm going to come back to it after we hear it. But first, I want you to understand about the digital transformation of civilization and how it's evolved over time and continues to rapidly progress, and how Bitcoin plays a role in this. So what we need to understand is that we are in a transformation of an asset class. This is not just adding an asset class where Bitcoin and cryptocurrency is a new asset class. It's transforming existing asset classes into a digital space. So let's hear Michael Saylor for a couple of minutes, and then I'll talk about it to bring this all home for today.
If you have a big tech network and you can put hundreds of thousands of businesses on it, or tens of millions or hundreds of millions of people on it, and you can replace something in the physical world in the 20th or the 19th century economy, then you've affected a digital transformation of the civilization. The problem with gold is you're not doing a digital transformation of the civilization. It's a 5,000-year-old idea. It stopped working in 1914. If you want a good digital transformation idea, Twitter, Facebook, Google, Square, Bumble, Tinder, Uber, Airbnb, it's Instagram. It's not complicated. We've got 100 examples in front of us. The digital transformation of blank. Bitcoin is the digital transformation of property. Gold is not. You want to get rich, your only hope is to find either to create an asset that is going to appreciate by a factor of 100, or to buy an asset that is going to appreciate by a factor of 100. The only assets that will appreciate by a factor of 100 or 1,000 are, by definition, assets that 99% of the population doesn't appreciate or understand. If you go down the street and you ask 100 people, do you think Apple is a valuable company? You're going to find that 50 of them agree with you. If you had asked the question 20 years ago, do you think Apple will become a $1 trillion company? The answer is no. I mean, at one point in time, Michael Dell said to Steve Jobs, back in 1997 or so, you should give the money back to the shareholders and shut the company down. If you went back to 2007, when they rolled out the iPhone, everybody didn't agree with them.
So I'm popping back in here just to bring us a little bit to closure. I am going to move back to a particular spot in this video and share that image. I want you to just understand that that's what we're going to be talking about today. Appreciating or understanding the difference between where we are now and where we are in the big picture of things, and how ahead we are in that 99% rule and how to gain 100x. That's what we're going to talk about next. So before we get to our conclusion of the video today, I just wanted to give a relative scale number for some of you to understand and put this all in perspective. So we talk about gold and Bitcoin, and how Bitcoin is essentially digital gold, and we compare those market caps with Bitcoin dancing around $1 trillion. As Bitcoin hits $50,000, it will be essentially $1 trillion market cap. Crypto will be about 2, let's call it, for easy numbers. Gold's around 10, again, for easy numbers. If you look at this chart, and this chart, keep in mind, this chart is from 2010. I was looking around for more recent versions, could not find one. If you happen to know of one, please let me know. That would be great. But what I was able to, you can see relative scale here. The image of the globe here represents the global domestic product for the world, $63 trillion in 2010. That is 10 times the size of, no, 6 times the size of gold. So gold at $60 trillion, or $10 trillion, looking at 6 times. So that is just a relative example. And again, this is in 2010. Imagine what the numbers are now with all the fiat printing. You're probably looking at a 10x of these numbers. So first, from a relative scale, let's just say that gold represents 1/10 of the GDP, just for simple things. So now, if Bitcoin gets to be comparable of gold, that's 1/10 of the GDP. So Bitcoin could go 10x more and be comparable to the GDP of the world for a year. That's an ambitious number, but hang tight. After that comes this volumes of shares and bonds in 2010, which is 87 trillion, or about 1.3, 1.4 times the size of the GDP back in 2010. Again, those numbers have increased. Now we're talking even larger. Financial derivatives. Now we're getting into some really interesting numbers. $600 trillion, roughly 10 times the size of GDP back in 2010, probably much larger now. So that's 100x of the size of Bitcoin itself, or gold. So do you start to see where these numbers are scaling? And then lastly, all the foreign currency transactions is even larger, 1.5 times all the financial derivatives. So you could see that we're looking at 10 to 15 to probably 25x of the GDP, which is 10x of Bitcoin, so now you're looking at a 250x. And that's probably conservative just for Bitcoin. Do you understand now why I'm studying DeFi more? Do you understand why I'm diving deeper into taking this asset, which is going to increase in value, and using that as a baseline for borrowing against it? Because it's an asset class, much like real estate, much like GDP, much like you're producing goods, not necessarily goods and services, but your tangible objects. I know Bitcoin's not tangible, but you get the idea. It's representing tangible value. GDP is a value number. You can see that Bitcoin can scale up 100 to 150x when you start to get into the world of finance and currency. That's why DeFi is such an exciting space, why cryptocurrency can expand so much, not just Bitcoin. There are others that are going to be involved in DeFi. We talked about Ethereum and how tied they are with DeFi, but all these other platforms that get involved in smart contracts like Cardano or Polkadot, or all these different things that are going to be used as currencies like Litecoin, Bitcoin Cash, Divi, even XRP. All these different things are going to be out there. There is so much room in this space for expansion. Now we're going to talk about, since we're talking really that Bitcoin is roughly less than 1% of this picture, now we can bring it full circle, no pun intended, of the 99% versus 1% and where we really are today. So that's the video for today. I put a little bit of it together with some clips from Michael Saylor and some imagery. Hopefully that you enjoyed this format. I just want to focus on one key topic each day as I do a semi-live or regularly scheduled broadcast. We'll see how that goes. But I just wanted to talk about the relative numbers, 99% versus 1%. It is clear if you look at the financial numbers based on just the market size, the market cap of crypto, we're not even at 1% yet because the big money hasn't come. The big money comes from financial sectors, derivatives, stock markets, all those things. When we have all these things that we know are manipulated and rehypothecated, and look up those big words, but there's too many shares that they don't exist. When we start to transform that and put that into a trustless blockchain system, we're going to see massive expansion. Now, as far as how many people are involved, we're above 1%. Yes, we're above 1%. When we have countries like El Salvador adopting Bitcoin, more than 1% of the world knows about Bitcoin and crypto and knows about it. But that doesn't mean 1% of the world's money is in there. What it means is that the people are starting to take notice and get involved, but the rest of the money that is out there, the rest of the currency that's out there is still waiting to come into this marketplace. So as it matures, as DeFi expands, as NFT grow, as different custodians and different financial vehicles emerge and funds and the ability to get into true crypto adoption where people can just write a check and just say, I want to be in Bitcoin. How do I do it? I don't want to learn about this technology, the wallets. And granted, I love that you guys know it and you talk about not your keys, not your coins, but the average investor is just going to want to say, how do I put my money in the safest place where it's going to grow and appreciate and be there when I retire? That's what a lot of people just want to hear. They want to hear that an answer. And the only answer that makes sense to me is something that other people can't see yet, which is that we are in a transformation of not just the asset class of gold. We are transforming the asset class of finance. So that is what's really happening. And that is that last circle illustration, that Venn diagram to show you how big those numbers can get. We're looking at hundreds, if not thousands of multipliers of Bitcoin and other coins that are going to grow in the space. So yes, 1% of people or more are in it, but 1% of the money is not. That's the difference. And as Michael Saylor said, which I really loved, and that's why I used that clip, to make 100x on anything, you have to be that 1%. You are that 1%. So congratulations for that. Keep it going. Grow the adoption. Help people to understand that, yes, there are solutions out there that you are going to be your own bank, but there can be, if you need a new type of bank, there are solutions for you that do you want your grandparents that are retired in Florida to have to learn about seed words and public and private keys? No, they just want to learn, how do I get into Bitcoin and just how do I protect my wealth going forward? So that's there 5-10 years from now when everybody's like, well, all these other people are printing out money and just creating inflation and just eroding the value. That's the difference. 1% of the money is only there now, but we're going to help lead that way and get more people to adopt and evolve. So if you have any questions, you know how to reach me. It's in the description. That's all I'm going to talk about for today. But just keep that in mind. There's a difference between the 1% of the people, we're above that number, but there's different, and the 1% of finance, we are below that number. So that's why it's really exciting to see where this is going to grow and to fully appreciate that we're not even close to there yet. So let's keep on moving forward. Let's keep promoting the adoption. Let's grow this space, add more people to the puzzle, get them to contact people like me so they can get more help them yourself, however you can. Promote adoption, talk about cryptocurrency. It's coming, get them ready. So lots said today. I'm going to close the drawer on the bureau and I'll see you next time.